and begin to free myself from my job. Check the link in the description below for more information. You usually need a minimum credit score of 580 to qualify, also lower than the 640 necessary for conventional. It also takes less time passed to qualify for an FHA loan after a bankruptcy than any other loan types out there. FHA also allows you to use gift money from family or friends towards your down payment and closing costs, and you may be eligible for down payment assistance as well, which essentially rolls most of your down payment into the loan, reducing upfront costs. The catch to this is that with the down payment assistance, you can only purchase a home with 2 units or less, so a duplex is as big as you can go. FHA also cuts you some slack on DTI, or your debt to income ratio, which can be up to 50%. Contrary to popular belief, there is no income limit on FHA loans, and the loans are usually assumable. That means if you already have an FHA loan and I want to buy that property off you, as long as I qualify for an FHA as well, I can take over your loan with the same terms you had it at, such as interest rates. This means if you bought the home before COVID, when interest was crazy low, I could keep that same interest when I take over the loan. So I could have an interest rate of 3% as opposed to the 6 and 7% that are available today. FHA also offers a streamlined refinance program, which basically allows you to refinance the home with less paperwork and more flexible requirements than traditional financing options. You may want to refinance when interest rates drop, or if you wish to cash out some of the equity you've built in the home. FHA also allows you to purchase the property and add renovation costs onto the same mortgage for combined costs. However, the property must be in livable condition and the requirements are strict. Any kind of roof leaks or broken windows or other similar issues will disqualify the home, and the seller will need to fix these issues before the loan can be funded. You can buy anything from a single family home to a 4-unit apartment building with this loan. However, if you're looking to buy anything above 4 units, you will have to look elsewhere. The VA home loan is another government-backed loan specifically made for veterans or eligible qualifying beneficiaries to allow military families to purchase a home. This loan requires no down payment at all, lowering upfront costs, no PMI, lowering monthly costs, and typically offers lower interest to lower qualifying credit scores. The VA allows sellers to contribute up to 4% to closing costs, lowering the money you spend up front even more. It has a very flexible DTI, or debt to income, and is a lifetime benefit, which may be used many times. The VA also provides resources and assistance to help avoid loan defaults and foreclosures. To qualify for a VA, a service member must serve 90 consecutive days of active duty federal service or 6 years in a reserve component. The VA is an excellent loan to use for those eligible, and I highly recommend you use it. You may buy anywhere from 1 to 4 units for multifamily homes. USDA loans are also government